Oh, you were giving away the phones as well. Nice. That's nice. I should have taken part in this. Okay. Welcome. I think the weather is treating us as quite okay, right? It's not as bad as the weather forecast was saying. So hopefully we'll have also a little bit of time in the meantime to go around this beautiful garden. But before we do that, we will be talking about the standards. Some of them I mentioned yesterday, the ISO standard, the GEG protocol, and the PCAF. I will show you one case of reporting to point you how one of the financial institutions are showing off what they report on, what they save, what's the scope 3 reductions they are reporting, for example. There will be more examples in one of the following sessions so that you see maybe not best in class, but just see a review of some institutions that report already for a few years. I would like you to take out of this session just basic understanding what's ISO, what's GEG protocol, and how does it differ from PCAF, right? So what the protocols, what the standards, what is the purpose of these standards? Sorry, the jet lag is kind of still making my mind a little bit fuzzy. Okay, but need a little bit of warm-up. So ISO standard is one of the international, it stands for International Organization for Standardization. There are 5 different categories of ISO standards. One is about quality management, second is about safety measures, third is about environment, fourth is about IT security, and I forgot the 5th one, maybe someone remembers. Food safety, food safety, yeah. So these standards are used by many companies across the world. They are non-mandatory, obviously, unless there is a regulation, national regulation that requests that, but in general they are non-mandatory. And the ones that are in our interest are the ones starting with 1.4. You see here 1.4, this is the environmental management, which I also didn't mention, right? So the one about greenhouse gas emissions is ISO standard 14064. And this is about, this provides guidance to the entity that would like to report on gathering information, categorizing it, calculating, and then providing the report at the end and verifying as well. So there are actually 3 parts of this standard. First is ISO 14061, second is 2, third is 3. The first one is about providing a greenhouse gas emission reporting of an organization. The second one is about providing greenhouse gas emission reporting on project level. And the third one is about verification. Typically, I believe you need to pay for getting the ISO standards, but some of the standards are just available somewhere in the internet. You can easily find them and read. They are not so complicated, I would say, especially once you are briefed yesterday, today, and tomorrow. I don't think it will be too complicated for you, actually. And of course, the benefits of how they communicate the benefits of the ISO standard is that it allows for transparent reporting on greenhouse gas emissions, and also allows comparison between institutions that are aligned with ISO. The standardization obviously always simplifies the reporting. It reduces efforts because it provides some guidance. You don't need to look for guidance elsewhere. It provides the guidance in the document. By this, it also reduces costs. And if a company is using ISO standard, it increases kind of confidence of any stakeholders or external parties, and increases the credibility of such an organization. You remember yesterday I was talking about the principles. So these principles in general are the same across many of the standards and frameworks that we are talking about. So first is relevance. So if you are reporting on greenhouse gas emissions, you need to provide relevant data. It means if you're reporting on this building emissions, you should not provide data about another building, basically, right? Or some data that are not relevant for greenhouse gases. It also needs to be complete, right? So we are providing greenhouse gas emission reporting on this building, not half of it, right? So it's obvious, right? It has to be also consistent over time. So the way you're reporting on a particular, let's say, asset class, sorry, emissions need to be the same unless there is a critical change in the base year. I will be talking about that. Then you need to recalculate, right? But the consistency is important because it also allows to compare yourself to the previous years, right? And whatever investments you're doing, for example, in a building, insulating, adding efficient appliances, adding efficient lighting, then you can actually calculate what's the environmental impact of your investments, but only if you have the consistent way of providing the greenhouse gas emissions, right? Another principle is accuracy. And this is where the descriptions are kind of going into goodwill. I mean, it says that you need to be as accurate as you can be, yeah, at certain moment. There are different ways of collecting data that I will be talking about, and there are different levels of being accurate. Yesterday, one of the gentlemen was asking about the level of accuracy in PCAF. This was you, right? So we will be talking today about the PCAF. And of course, there are levels that are more precise and less precise. But if you don't, of course, the best situation is where you're very precise, but there is always the payoff in costs. You know, the more precise you want to be, the more cost you will incur. And for example, you know, the best, disregarding any cost, right? The best way would be to actually measure the CO2 emissions, which almost nobody does, right? It's done on the level of power stations, and by the way, on daily basis they actually calculate it. But in general, in the industry, it's not actually measured. So there are other approaches that are also acceptable. They are typically a little bit less precise, but since we are talking here about financial institutions and not about laboratories, right? A certain level of accuracy is acceptable. And then the word that I want you to remember is transparency. All these documents, TCFD, TNFD, all the standards, they are about transparency. So that we don't talk about our actions without any alignment to any standards, and we are actually transparent and open about what we do, according to which standard we are doing it, what are the assumptions, What are the exclusions? Yeah, we might not have some data, so we can say we just didn't provide this data. And this needs to be transparently written on paper at the end of the day. Yeah, my current work is actually about that. Many institutions that we advise actually are creating their own, let's say, internal taxonomies. You know, they are trying to align with the standards, and we have to explain to them. And many of these institutions actually have some experts in greenhouse gas accounting, and these are typically, you know, the people that deal with all of it in an institution. But the fact that there is a person that has everything in his head this is not transparent at all, right? And this is actually a big risk for an institution. I mean, it's good to have a very capable person, but the person can leave the company, get sick, you know, many other things that can happen, and then you're left not knowing how to move forward. Yeah, so behind the transparency is actually having the document, right? Having a policy where you state we are aligned with this standard, we are doing the reporting every year, this is the responsible entity, and so on. I will be talking about this process in the upcoming sessions. Yeah, ISO standard also kind of provides guidance on organizational boundaries. It actually for reporting requires to define your organizational boundary. And of course, if this is a simple SME owned by one person, the boundary is quite simple. But if it is a bigger company with shareholders and so on, the boundary becomes a little bit more complicated, and we'll be talking about it as well today. We also need to define reporting boundaries. So we might have the organizational boundaries might be a little bit wider, and the reporting boundaries might be a little bit lower due to some specific circumstances. ISO also provides kind of directions about reporting on direct greenhouse gas emissions and removals, as well as indirect. And this is where the scope 1, 2, and 3 again appears. You will see different graphs with the scope 1, 2, and 3 because these are different sources. This is taken from the ISO standard, I believe. But they are all, in terms of definition, what's scope 1, scope 2, scope 3, they are all aligned. It's exactly the same. So just to remind you again, scope 1 are all direct emissions coming from assets and sources owned by the company. Scope 2 are emissions coming from the energy and water purchased by the company. Right? And scope 3 are all other indirect emissions. Yeah? So leased cars, employee transport, whether it's flying, whether it's public transport, even own cars, purchased products, and so on. And ISO standard later on also kind of provides guidance on selection of qualification approach. So while you're drafting the report, you need to define what type of models you will use to estimate the emissions. You need to also recognize the limitations, the uncertainty of the models. And this is, again, part of the transparency, right? The assumption. And kind of, again, year to year, you should be consistent in how you're reporting. Then the next step is calculation of emissions, and you do it using the approach you choose, right? You provide information about direct emissions. You recalculate different greenhouse gases into CO2 equivalents using the global warming potential indicators from IPCC. And then there are some specific elements, since ISO requires to report on biogenic emissions, so emissions connected with biomass, amongst others, in a separate way. And there is a guidance in Annex D on that. If anyone wants to see the standard, I could possibly send it to you. Or you can just Google it and just download. And then you quantify the emissions or removals from imported, exported electricity, and then there's also specific guidance on agriculture, right? Another important element of the ISO standard is defining the base year. The organization should establish a proper base year, and this should be a meaningful base year. So it should be a base year that was in normal operations of the institution, right? So I would say a mistake that could be done lately by some organizations is taking as a base year a year of COVID, where the employees were at home, the offices were closed, nobody was commuting, the air conditioning in the offices was off, the loan, the portfolio, the pipeline of the loans dropped. This wouldn't be a good baseline here, right? You need to choose the one that and this would be also honest, right? Because your emissions during COVID most likely were lower, right? And this is not a true kind of image of your institution. And by the way, it might backfire, because if your base year is a year of low operations, then any actions, mitigation actions that you later do will not really be visible in the reporting very well, right? So this has to be well considered. And then ISO talks about planning of the inventories. So you need to think about the purpose and objectives of greenhouse gas reporting, also assign responsibilities. Who's responsible for the report? It cannot be 10 departments, because it will just never happen. It has to be one, let's say, team, one person, one team that is in charge, and they will drive this reporting. You define frequency, you define structure of the report, you define data that are included, and how you will disseminate the report, right? So typically organization prepare the first greenhouse gas report as internal one, and they don't share it. They share it only internally, discuss internally, seek for some feedback from internal departments, and then the next report typically is the one that goes public, right? And we think about how it should be made public. It should be typically on the website, and as I was telling yesterday, typically such a report should be somehow connected and relevant to the financial reporting as well. It just makes sense. ISO also provides the greenhouse gas kind of outline, just to make it easier. Yeah, so there is a short description of the organization, definition of responsible entity, so that anyone who has some questions know how to approach the entity. It defines the period. Typically, it is annual, although I could imagine there are businesses where the reporting might be done in a different period. And actually, in choosing the period, also seasonality of some businesses is quite critical, right? But we will be talking about the base year later You define the boundaries, operational boundaries, reporting boundaries, and criteria by which you used during defining the boundaries. And the criteria I will talk about later. Then you list the direct greenhouse gas emissions. This would be the scope 1 and let's say 2. Then biogenic, so the ones connected with biomass. Any exclusions that you didn't report on for some reasons, and you need to provide the reasons. Also, you need to define quantification approaches, factors, so global warming potential, emission factors which you used, and what are the sources of these factors. Also, uncertainty level. So this goes to the classes of data that we will be talking later on. And ISO also states that there should be a statement that we are reporting according to the ISO standard. And also at the end, you need to say whether the report was verified, how it was verified, and what was the outcome.
Mika?
Yes?
Just, I think we had yesterday one question is about, is there somewhere also a kind of a way to justify in case, for example, your scopes have, like emissions have changed from one tier to the other?
Yes, I have it in the presentation.
Okay.
Yeah.
But maybe we can also use the time to ask questions, whether there are some questions before we continue.
Okay. Yes?
Just one question on my side. Typically, would an institution choose one particular standard or protocol? Or do you find some institution actually trying to use multiple protocols, whether it's ISO or PCAF? So what's your experience?
I saw institutions doing differently. Maybe I don't have enough experience to understand why. Maybe they operate in different environments, and let's say in one region ISO standard it's more recognizable, in another GHG protocol or another one, right? And then they want to cater to their stakeholders, right? So that's why ISO standard talks about purpose and objective of the reporting, right? For who are you doing it, right? And you need to, and this is actually like I think a question. You need to consider whether ISO is the one for you, right? Consider your country, your region, your shareholders. If your mother company uses a certain protocol, most likely you should do it the same, right? So yeah, but at the end of the day, these standards are very kind of similar. You will see, because in a few slides I will be talking about the greenhouse gas protocol, and I kind of have to repeat almost everything that I just said, yeah, because it's very, very similar. The thing is, and I have to repeat, doing the report itself is not really hard. The critical point is the data. This is the only thing. I mean, with preparing the report, just read the guidance. You do as according to the guidance. You have the report. The problem is with the data. And aggregating the data. So going from if you have a mother company and a few smaller companies, you need to aggregate the data, get the data on time, right? Because there is a deadline of the report that you want to have, right? If you want to connect it with your financial report, there is a day of the financial report when it's being published, right? So you need to get this data on time, right? So, the data are the critical ones, and the fact that these standards are very similar to each other actually shows that this is quite a kind of straightforward process, at least from my point of view. Of course, yesterday I was talking about the verification. Again, the verification has to be impartial, objective, and critical. It cannot be the same department checking their own work. Of course, you represent financial institutions, and you do understand the verification process very well, right? And the verification standard is the third one, the third part of the ISO 140 64. You have a question? No? Okay. And of course, we do it to check the errors, confirm the results, fix anything that needs to be fixed. And also, the fact that report is verified increases its credibility, right? So now we move to the greenhouse gas protocol, which is another standard that you can use to kind of gather data, process them, and report. The main goals, according to what they say, is to reduce burden of the measurement and reporting, define risk and opportunities, support management in the decisions concerning environmental impact of the institution, and again, supports the transparency of the company. There are multiple publications, as they call it. So there are different guidance on different type of situations. So first of all, we have corporate standard, which talks about emission reporting by corporates. There is the one that is focusing on scope 3 reporting. Then the product related. So we have a product and we analyze, in general, kind of footprint of this product, and then project related guidance. So you need to decide what you want to do. If you're a financial institution, you want to report on your emissions, you choose the proper publication and you go align this guidance, right? Yes?
But these are they complement each other. If you just go one slide back.
Yes.
I think just to make, because you choose, but you can, depending on the context, you need all of this.
Which one?
One slide more. Yeah, here for the entity, product, and project.
Oh, yes, they complement each other.
Exactly, just to clarify.
Yes. Sorry for this. Okay. So there are three types of accounting. First one is the one that we talk the most about, is the entity accounting. So we have an institution, organization, financial institution that would like to report on its own emissions, and this is exactly what I just explained during the ESOP presentation, right? So we have an institution, we check the emissions during the base year, and then we report on following years, and we can compare these years and see whether our mitigation actions achieve some results, and also to understand, where we are standing in comparison, for example, to other companies in the same sectors, right? And by the way, basically, I am coming from a very practical experience, because most of my work is about actually reporting on SME level, on project level even. So that's why many of these examples will be coming from it. The measurements in general are very important. If you measure something and you have a constant, let's say, value, right? Whether it's emissions or maybe water consumption, electricity consumption, if it's constant across the months and years, then most probably everything is okay. Of course, you should mitigate and reduce your impact, but everything stays the same, right? If there is a peak, right, on sudden change in the emissions, in the water consumption, electricity consumption, from the SME point of view, for example, it means something is broken, most likely, right? So the fact that you are reporting also allows you to pick these situations. I mean, the example that I always bring is the one from Poland. We had a client who had a very high water consumption, and he didn't know why. Yeah, this was a meat-producing company, and they were using water to wash the carts, after the production. So we advised the guy to install water measurement devices that would be connected to the laptop, and he could see the water consumption over the hours. So he found out, and this is a real story, it sounds like an anecdote, but it's a real story. He found out that during certain time, there is a peak every day. And he didn't know why. He went to the workers, to the employees, asking what's up, and they said, no, everything is as always. Okay, so he installed cameras. And what he saw was the guy that was cleaning the carts. He was taking cigarette breaks, and he was not turning off the water from the hose and just putting it into sewage and going for a cigarette, right? So only this measurement, this payback period of this measurement devices was below 1 month, right? And it was very fast. And this is a very kind of small example, but it can be brought out to the level of greenhouse gas emissions, right? So if your building has a boiler and the emissions, right? The natural gas consumption, for example, right? And at a certain moment it's higher, it means something is wrong. Either you had a cold winter, which you would know, right? Or something is broken. And this is, again, one of the positive sides of measuring, following up, reporting, because it allows you to analyze your business. And this goes about SMEs, production facilities, but it can also be used maybe in a little bit different way by financial institutions. And you could possibly in future also monitor this, from your this information from your clients, and understand whether they are doing some risky business, for example, right? If they become more, if their emissions rise. Okay, the second type of accounting is project accounting. This is where I have the most experience, since I do green lending facilities in different places. So this is where we focus not on the entity, not on the organization, but on the project that the organization is implementing. And typically in the green facilities, there are eligibility criteria that allows us to state that this project is green, right? So one of the most known criterion and used for many, many years, now it's kind of slowly changing, was that if there is 20% of energy savings, then the project is green. So for many years we were using this criterion, and this project accounting is exactly about that. We are checking if this project is providing emission reductions. And by analyzing that, we can actually see, let's say the emission reduction is very small, or actually the emissions maybe are higher. So then the discussion can be done, what can we do to make it better? What can we do to make it more environmental friendly? And sometimes there are small peaks in the project that can be done. Another example from my experience. You have a question? Okay. Did anyone of you did a green project? You have some example that you could mention? Where is the gentleman from India? You have a lot of examples, right? No, but what type of technologies do you finance?
You need to take the microphone.
Yeah, if you could. The microphone is over here.
See, so our financing is entirely to the MSME sector, and we cover all the sectors like foundry, forging, right, and even the solar rooftop.
Okay, but you mentioned you have a list of technologies that you...
Yes.
Okay, so what technologies are there?
So there are more than 900 technologies which are listed in that list.
These are models of technologies or type of technologies?
These are like mix of equipments which are related to the product and process in different sectors.
So you would have solar PVs, right?
Solar is just one part.
Okay.
So when it comes to energy efficiency portfolio, so like in foundry, there are so many technologies which are there to improve the efficiency of the operations of the MSME units. Similarly, for other sectors also, we have number of technologies.
Okay, so electric motors that are aligned with one of the standards.
So like VFDs, a
IE4.
typical example, like variable frequency drivers are there. So if any MSME unit is going for VFD installation, so definitely the efficiency is going to be improved. So similarly, like if somebody is going for an induction furnace in the process, so that is going to improve the efficiency, overall efficiency of the unit. So there are around 900 plus technologies listed.
Okay. The last one is a big one, right? The furnace.
Yes.
Okay.
I mean, being in MSME domain, so we cover all the sectors, be it foundry, forging, automobile, engineering, textiles.
Okay, but say you have an electric motor that is high efficiency, IE4 maybe, right? So how do you report greenhouse gas emission reduction?
So what happens, this list contains the estimated energy saving potential also. So based on our experience, and we have created this list, and if you compare it with the conventional technology, this technology is going to give you, say, for example, 15% energy savings or 20% energy savings. So based on that, then we are setting the baseline and then calculating the likely emission reduction for each and every this technology.
Okay, so you have a baseline electric motor, like an old electric motor somewhere in your assumptions, right?
Right.
Yes. And then the 15% is just 15%. Do you calculate tons of CO2?
Yes.
Okay.
Yes. So we have an emission factor, grid emission factor in the country. So if I have a baseline, so and on what is the overall consumption in the previous technology, with the new technology, if the likely potential is, say, for example, in the range of 15 to 20%. So let's take 15% as the base, and then we are calculating the what is the total energy saving potential, and using the grid emission factor, we are calculating the likely emission reduction.
Okay.
And the verification is happening on a sample basis, say after down the line, say 6 months or 8 months or 1 year, because the measurement and verification is the critical part, right? So at the time of sanctioning the loan, we are just estimating what is going to happen with this particular project, which is to be implemented by the MSME unit. But the measurement and verifications gives you the exact results. So agency is placed, do the energy audit, or do the measurement and verification, and then come out with the results. Actually, the project is giving how much savings in terms of GHG reduction.
And I understand you take the power of the electric motor, the working hours, and the...
Exactly. The entire technical specification, is built into the tool and then calculate.
Okay. Did you consult this approach with any international institutions? Are you using some green funds from development banks and so on?
So like all our green financing right now is happening through multilateral and bilateral fundings only. So we have been taking lines of credits from JICA, back-to-back number of lines.
ADB?
From KFW, from AFD, right? Yeah, obviously. We are negotiating. In fact, we're in the advanced stage of negotiating another line with AFD right now. And we are accredited entity with Green Climate Funds. We have already grabbed one proposal, which we are anchoring, and we are submitting our own proposals to the GCF as well, which is again for financing adaptation and mitigation project. So wherein we have defined the entire methodology, how the GHG emission is being calculated.
And you came clean and transparent to these institutions, right?
Obviously, yes.
Okay. Yeah, I'm asking because this approach is... this is the approach that typically is used. It's very technology specific. It takes some, let's say, effort to do that, some capacities, internal capacities. what I see on the market in general, that it's getting harder and harder to use this approach, because more and more institutions are looking into standardization, labeling, and so on. But the challenge is that in Europe, we have the comfort of having the labeling, having the best available technology documentation, the BREF documentation, the directives and so on. So in Europe, it's actually easy to expect someone to provide you some labeling or maybe energy audit according to the EU directive of energy efficiency, right? In developing countries, we don't have it. That's why this approach actually works, and I would really support it. Although I do work in some developing countries, and I'm starting to get from donors requests that we should be kind of more precise, because it really bases on people that set up this, this your internal standard, right? And this is just an internal standard, right? And I on my project we have the same, right? And they are asking, okay, but how did you do it? Who's standing behind it? What's the proof? So this is becoming harder and harder.
Yeah. So like this technology I'm talking about, it's based on our 15 plus years of experience in doing these green financing to the MSME sector.
Yeah.
And we have developed these technologies over a period of time. And based on the MNV reports, number of MNV reports we have done as part of the impact evaluation exercise for each and every, the funding we are getting from the donor agencies. Yeah. So based on that learning and experience, we have came out with this list, and it's keep on refreshing and revalidated, and
of course
that's a regular exercise that we do. Yeah.
Mustafa, you wanted to say?
Yeah. Maybe just to comment Yeah, just to comment on the fact this is a very specific example of SIDB. And I would say that the banks we are all designed as development banks, but we are doing very different things, in fact. So, and I think what is unique, for example, for SIDB is that they have direct contacts with the SMEs, and they provide the loan to the SMEs, and they have really, my experience with them is that we finance credit lines, and we finance more than 600 SMEs through this credit line. But you have other banks that are mainly specifically financing infrastructure, big infrastructure. So you have a different approach. You have not that much, I don't know how many SMEs, CDBs, but it's huge. In the case of infrastructure, you have maybe 40, 50 projects per year. You have also cases where you have banks financing through other banks. So they don't have access to the information. And we have some examples that banks are providing 70% of their activities is through other banks. They are second-tier financing. So they cannot have the same quality of data, and they have to invent we have also the same case in IFD, because we have also provided a lot of credit lines, so that the fact that you are not access directly to the clients is making difficult for you to get the quality of the information that you have when you make it exactly straightforward. I think that this should be taken into account, and the diversity of our members is really important in this aspect.
Yeah, of course. I mean, the SME finance is close to my heart because I do a lot. But of course, from my point of view, this approach is the easiest one. We talk with the client, we know what he has, we know what he buys. There's a little bit of effort, but at least we have the full control on it, right? When you go into bigger projects, when you go into areas where you don't have data, you don't have anyone to ask even, right? Then you have to switch into direction where the Italian Development Bank did, using the sector-related factors, proxies, right? So I'm not saying one is better, the second is worse, but both of these solutions have their pros and cons. Cons of this solution, very individual, is that there's a lot of work behind it, right? The pro is that you have the data. You can just acquire the data. With the proxy, it's a little bit easier because you could even take euros of finance, multiply it by a factor, and you have tons of CO2. But if you look at a sector company, right, let's say it's a very heavy industry type of company, and they implement a very efficient project, and then you use this factor, then the greenhouse gas emission reporting is not fair, right? It's actually overestimated. So it's maybe a little bit easier to calculate, but the negative side, you might be actually making a big have less accuracy. Yeah.
I have, Michael, I have one question. I hope it's not a stupid question. But, if you just go back, can you go back one slide? If I have a project and for a new type, what I've not done before, what is my baseline? For example, maybe it's a constructed example, but I'm a company, I had never my own fleet, no cars, and now I'm deciding to buy electric vehicles, which are clearly kind of a good kind of energy efficiency. But if I had never a car before in my company, what's my baseline?
Basically, you increase your greenhouse gas emissions, right? But there's a long-lasting discussion, because there's a difference between reporting greenhouse gases, right, and green finance. So there are many facilities where purchasing an electric car is considered green, and nobody asks you if you had a diesel car. But purchasing an electric car doesn't mean your greenhouse gases drop. Yeah. There's, right?
Yeah, but then so I would have then twice. I have two situations. Once I have the situation, I have a company who is replacing. Yeah. They would, as a baseline, put their diesel cars. Yes, they would to the cars, and then they would have kind of claimed emission reduction. Yeah. And the company who had no car before for the same cars would...
In your reporting.
In your reporting. Then I understood it.
In the game, we will be using the Excel file, and everyone will see when you put kilometers next to the electric cars, actually there is emission, right? Because electricity is not, in most of the countries, is not green, so there are emissions behind that. So in terms of reporting, goes up. But in green facilities that we will be talking tomorrow, when we provide financing to electric cars, very often, and really depends on the donor, on the circumstances, but very often what we do, we look at an average used car in a country. So we can acquire data about average age, whether it's diesel or petrol, the engine size, and we can kind of estimate the emissions from this car, and then we compare it with the electric.
I think what confuses me, it's like I always thought a bit like this project accounting is giving me also the idea which is the most efficient option, but that's not actually true.
No, it is, yeah. Because if you're buying a new car, you didn't have a car, then you consider what car I would buy, yeah? Typically, I would buy diesel, right? Let's say, yeah? And then, if you want to compare, the project accounting allows you to compare the emissions between the electric car and the hybrid car, yeah? You take the baseline. Mm-hmm. Okay?
Okay. No, just I wanted to answer to Christine's questions because I think it may provide additional context with respect to your doubt in relation to baseline. I think that what helps in understanding is to set the most probable counterfactual scenario across life cycle period, which is identical to the project scenario. So let's say the electric cars have a life time of 20 years. Then you have to assume what would have been happened in the absence of the electric vehicle across the same time period. So it's not what's happening now, the fact that now you're not using any fleet. You need to look at the same period over the next 20 years. Yeah. And so you have two different scenarios, project scenario, no project scenario. So electric vehicle scenario, no electric vehicle, hybrid vehicle scenario. And then you will have the avoidance of GHG emissions against the two different scenarios. So maybe I hope that clarifies a bit.
It's the artificial baseline, basically. So you have to set up a baseline and then use it as a point of reference.
Yeah, but it still comes to the same. So if my one scenario is I have no cars, I continue with no cars, and the other one is I purchase the electric vehicles, I would still have, as you said, in the reporting, higher emissions over this whole time. Yeah, that's...
No, but the other scenario can be that you are not purchasing the cars because you need the cars, right? So the counterfactual scenario is to use a different technology. I mean, that's the project. What you need to do is to have some fleets, right? No, that's how we do it.
This is where it's challenging to report on removals, right? Because the removals actually take these theoretical situations. But actual greenhouse gas emissions, when you purchase a car and you didn't have a car, actually increase, right? I mean, physically, there is more energy that you use and CO2 that you emit. But on the project level, we do this theoretical baseline, theoretical electric motor, average one, 10 years old, whatever, right? And we compare it. Mr. from CAF, right?
Thank you. Can you hear me?
Yes.
Yes. When you are developing greenhouse gas emission reduction projects in the transport sector, the methodological assumption recognized worldwide is that in the absence of the project activity that will be to buy electrical vehicles, the provision of that transportation service was going to be with transportation medias much more intensive in greenhouse gas emissions. Basically vehicles based in fossil fuels. And with that methodological assumption, you construct the baseline. Of course, that's a methodological assumption, but that's the way commonly used for the establishment of that baseline scenario.
So you create a theoretical means of transport, right, at the end of the day. That is...
The greenhouse gas emission reduction achieved by the project will be precisely the difference between that methodological assumption and the energy reduction of avoidance of fossil fuel combustion because of the implementation of the project.
Yeah. Thank you. Okay, moving forward, I look at the time. No? Is there a question?
No, I just want to add that in your hypothetical case that you're buying electric vehicles, you're buying it because you need that transportation, and you were using that transportation, I will guess, by renting a car or having a service provider that will give you that transportation, and you want to reduce those costs. So you will go with a hypothetical methodological assumption that you were using an average vehicle that it's powered by fossil fuels. So that's kind of why you're thinking about buying a new fleet, right? Because you need that transportation and you were getting that service from another provider from fossil fuels. So that will be your baseline, the way you were using transportation before.
Yeah, I think it made me realize that the hypothetical baseline scenarios can be really complex, because you could also think of your reallocation of your plant to avoid the car. So, but I think we stop here.
You're opening a box of Pandora, but it's good.
But it shows it's in a principle, everyone understands it's easy, but if you want to implement or try to mitigate, it's not that easy.
The critical difference is, are you talking about your organizational greenhouse gas emissions, or are you talking about project accounting? Right? This is the critical point. If you're considering only a car, then we take the theoretical car, we compare it, we have the reduction. But on the organizational level, you expand. You buy a new car, you buy a new production line. It doesn't have to be a car, it can be a production line. So with a new production line, still you might emit more. as an organization. But when we do green finance and we do production lines, we do use the theoretical baseline sometimes. Okay, and that's why within within the standards, the removals are reported separately, right? Because this is a little bit like pears and apples. Okay. Okay. The third type of accounting is product accounting, life cycle accounting. So we take into consideration the emission. It's about general what we call carbon footprint of the product. So coming from the raw materials through transport of the raw materials, production, transport to the client, emissions connected with the use of the product during the lifetime, and then emissions related to the end of life of the product. So whether it is dumped on the wasteland or whether it's recycled, it's also taken into consideration. Who should use the GHG protocol? And these are kind of arguments from the GHG protocols, so they are very kind of marketing, very nice marketing point of view. So to help companies prepare a true, fair account of emissions, right? To simplify, to assist businesses in managing the reduction of emissions, to facilitate participation in greenhouse gas programs, because GHG protocol is not a program. It's a guidance for institutions to report, but it's only that, right? And also similar to ISO, increase consistency and abilities to compare the companies between each other and assures transparency. And this is in general for businesses that just want to report inventories, non-governmental, governmental, universities, policymakers, and so on. Who uses it? Wide list of companies, IKEA, General Electric, 3M, Sony, Tata Motors, Caterpillar, AMD, and so on, right? So this is a very recognized standard. Since some of the sectors are very, very specific, there are sector guidelines that you open when you need to open it, when you deal with a certain sector. There are some specificities of sectors. You saw ISO standard has an annex on agriculture, for example, right? So this is equivalent of this annex. GHG protocol has some sector guidelines which provide you with some very, very specific information about sectors, which use some particular technologies which deals with some very specific emissions. What the GHG protocol defines a few business goals. First of all, to understand operational risk and opportunities that we already covered, right? Thanks to analyzing the emissions, you see how the institution is impacted by the environment, what are the risks connected with the climate change, and also you can seek some opportunities going into new markets, going into new products, new services, investing in resource efficiency, and so on. Of course, it also another objective is to reduce emissions, so you are able to point out parts of your business or part of your portfolio, specific companies in your portfolio that are heavy polluters, that have high greenhouse gas reductions, and then you can approach them and ask them, what are your plans? Yeah, because you might end up with some issues in the future, for example, connected with any carbon credits, carbon taxes, whatever we call it, right? And the company you as a financial institution should know whether the company has a plan. If they don't have a plan to deal with that, this is a higher risk company, right? So the next goal is to, of course, report to the stakeholders, which we already covered a few times. And I think we covered these questions. I think for the sake of the time, let's move forward. Okay, so GHG protocol, similar to ISO standard, defines boundaries of the companies, which are imaginary lines that define where the company starts and ends. And it concerns mainly companies which have mother companies, some shareholders and so on. And this allows to account for daughter companies, to account in a proper way for daughter company emissions. So we talk about any complex business structure, subsidiaries, joint ventures, franchises, and so on. And there are a few ways of defining and consolidating data. There is the equity share approach and control share. Within the control share, there is financial control and operational control. And on few next slides on examples, we will look into what's the difference. So when it comes to equity share, you have an example here with a mother company. There are two factories. Each of them emit 100 megatons of CO2 equivalent a year. In the first factory, the mother company has 50% of equity share. In the second one, it has 75 equity share, which with use of equity share approach means that the mother company will report upon half of the emissions from the factory one, because there is a 50% equity share, and 75%, so 75 megatons from factory two. Straightforward, right? How do we stand with the time? And what's the end of this session? 15 minutes. Oh, okay. The second approach is control approach, and within this control approach, we define financial and operational. So let's look at the example. Again, the same mother company, two factories with the same emissions. The mother company has financial control over factory one, which means it will, which means that it will report on all emissions of the factory one. In the second case, the mother company doesn't have financial control on the factory two, which means it will not report any emissions. This is the second approach. And when defining the boundaries for clarity, you need to choose the approach and define it in the report for transparency reasons, right? Okay, and the third approach is control approach and connected with operational control. The same setup with mother company and two factories. First one, the mother company has operational control, which means it will report 100. It will report all the emissions of the factory one. In the second case, it doesn't have operational control, which means it will not report on the factory two emissions. Right? We are talking about, for clarity, reporting of this company. Right? Okay, scope 1, 2, and 3. Again, maybe today will be the last time we mention that. And again, I'm repeating that because it's a simple concept. If you hear it for the first time, It's hard to remember. That's why you will hear 5 times during 3 days. You will remember, and the last time you will have to read about it or listen about it. You will now know what's scope 1 and 2. So again, scope 1 are the direct emissions of your factory, of your company, of your organization. So when we are burning fossil fuels in our boilers, when we are producing our own electricity, heat, steam, right? If we have chemical processes, we have production, we use materials, products, we have waste, we have some leakages of, let's say, refrigerants, right? These are scope 1 emissions. And by the way, you remember yesterday we were talking about global warming potential. The refrigerants have very high global warming potential, and actually very often badly maintained refrigerating systems are the main source of greenhouse gases of a company. Because a little amount, we multiply it by 23,000, becomes a big amount, right? You could imagine a shop, yeah, a big shop. They use electricity for what? For lighting and cooling, right? Not much more. So if they have leakages of refrigerators, the refrigerating gases, this will impact heavily the greenhouse gas emissions of this company, right? Scope 2 are the emissions connected to assets that we don't own, and these are connected with electricity, heat, steam, and in general energy that we purchase from utility companies, from other companies, and so on. Scope 3 are all other emissions, indirect emissions from up and downstream. If you would go to TCFD, they have a very nice way of showing all, I don't remember how many categories, I think around 14 categories up and downstream, if I remember right. Okay. As I told you, and as similarly to ISO standard, GHG protocol requires to report on emissions connected with combustion of biomass in a separate way. Since the biomass is treated in a special way, there is an assumption that the biomass, when it grows, the trees, it consumes CO2. And for many years, burning biomass was treated as a green way of production of energy, but currently we are also talking about nature positive, being nature positive, about biodiversity. So cutting of trees is not really good for the environment in general. We had this very bad situation in Poland, where which we have a very fossil fuel energy mix. So European Union obviously requested to have as much renewables as possible. So in order to reach the required levels, in Poland we started to burn our own forests. And at certain moment, I believe it was done without any control. So obviously this was not really green way of production of energy. So they were adding biomass to coal and burning it together in the power plants. And this luckily stopped. So that's why the biomass has to be separate. So there's a full transparency about this situation. GHG protocol also is structured in a way not to allow double counting. I mentioned yesterday what is double counting. Double counting is when two different companies claim ownership of the same emissions or the same reductions. This typically happens when there's a more complex setup of companies, shareholders, and so on, right? So that's why we have the scope 1, 2, and 3 emissions, and that's why we have the boundary definitions, and that's why we need to clearly state what type of boundary approach we choose, so that we also show that we are not doing double counting, right? Okay. Tracking over time. So as I was saying, you need to choose the proper baseline. So as I said, a COVID year most likely for most of the companies wouldn't be the proper baseline year. It needs to be a normal year of operation, and also a year during which you have that data that you need for your reporting. And the first data that you need to have is, of course, scope 1 and 2 as an institution, right? So if you have some years where you have only scope 2 data, or maybe you have a year where you have, for some reason, only scope 3, this is not a baseline. The baseline year is the one where you have scope 1 and 2 emissions. And then, as an organization that want to report on your emissions, you choose this as the baseline year. There was a question from Christine about recalculating the baseline year. First of all, the recalculation should not happen too often, right? If you have to recalculate, it means something's wrong with the baseline year or with things you do when it comes to reporting. So there might be a change of approach to calculation, right? You have to align with another standard, then you need to recalculate. There might be some significant changes in the factors, right? Then you need to change it. There might be some activities connected with mergers and acquisition, right? So you as an organization, you just lost one of the factories. I mean, not lost, but sold one of the factories. So part of your emissions are gone, right? So you need to recalculate. However, if you grow organically, you don't recalculate the baseline year, yeah? Okay, since we have, do we have 5 minutes? 8, okay, 8 minutes for PCAF. Okay, so we talked about ISO, we talked about greenhouse gas protocol. These are the ways to report on emissions by some organizations. PCAF is Partnership for Carbon Accounting Financials. It is targeting financial institutions and in particular the scope 3 emissions coming from your portfolio. So it's a different standard, right? So this is not, we don't have a situation that it's ISO, GHG, or PCAF. It's rather ISO or GHG and then PCAF. Yeah? PCAF is built on the GHG protocol. So I will not be repeating for the third time all principles and so on. If you open the PCAF, you will see the same principles mentioned and so on. What's critical here is how you calculate scope 3 emissions in your portfolio, in the investments you do, and this protocol supports you in that. It defines 6, they call it asset classes. So it's listed equity and corporate bonds, business loans and unlisted equity, project finance, commercial real estate, mortgages, motor vehicles, loans. So it supports you in reporting on these parts of your portfolio, right? And the general rule, the document is, I don't know, 100 pages or something like that, but the general, and it defines how you account for emissions coming from, for example, from a loan you gave to a company. And typically the loan would not cover 100% of the investment. There is a down payment, and how you account for the emissions connected with this loan, right? So the general rule is follow the money. So we look how much money you gave to the institution, how much money you invested, and what's the value of the whole project you finance, let's say, of the whole. And then you only report on the share you financed. This is the general rule, right? And the share they call attribution factor. Yeah, you see here the attribution factor is actually the share of your money, let's say, in the total emissions connected to whether it's business loan, mortgage, equity, and so on. Okay. Data quality, there was a question about that. I mean, the question not to me actually, but to the gentleman from CAF. So let's see, maybe today after the session you could discuss it. Okay, so we were talking about the data, and I think, again, I have to say the gathering of the data is the biggest issue, the biggest challenge you will encounter. So the PCAF defines 3 options. There is like a data quality score in PCAF. So first option is emission data that you got directly from the borrower. Yeah, so you provided the loan for a facility, whatever, production line, building, whatever, right? And they come back to you saying what you finance emitted 100 tons of CO2, right? So this is the first option. And this data might be verified or unverified. So there is like a data quality score where we describe the verified emissions as 1A and unverified emissions as 1B. And this is what the gentleman yesterday was mentioning, right? From experience, you most likely will not get it from the smaller SMEs, maybe from the bigger SMEs, but also rarely, of course, from the corporates, you can always just request it, right? Because the loans are typically bigger, and you can have within your environmental policies a request when there is a big loan for a corporate, they need you to provide you with the emission information. And this is a good situation, especially when they are verified, right? Then you're safe. Because you take this data, you put it into your report if anyone asks. So, I don't know, the rating agency, right? Because they are now introducing the sustainability ratings in the rating agencies. They ask, where did you take this number from? You say, this is a verified data from our borrower. The verification was done this and that way, right? And then as an institution, you're cleared, basically. Then the second option is estimated emissions. So you're not getting information in tons of CO2, but you're getting information in terms of kilowatt hours of energy they use from the facility you finance, or tons of products, tons of steel they are producing from the steel mill you financed. And then by using appropriate factors, so tons of CO2 per kilowatt hour, which is data available typically on the national level, the grid emission factors, or regional emission factors, depending how big the country is. Or you use sector-specific information about tons of CO2 per ton of product. You multiply one with the other, and you get the data. Of course, there are subtypes to A to B depending on the type of asset class. It's whether they know the energy their energy consumption, or you don't know the energy consumption or the production size. Then you have to react appropriately. If you don't know the energy consumption, you need to use kind of location-specific statistical consumption. The best example is buildings, right? They might come to you and say, we are using this amount of kilowatt hours per year, or they can say, we don't know, we don't have a measurement device, right? Because we have electricity consumption, we have natural gas, we don't know how to even add it. So you don't know this, right? Then you could possibly use statistical approach. You look at the the local requirements towards buildings of this type in this localization. What is the energy consumption per square meter? And then you can calculate up to the tons of CO2 emitted. Yeah. And the last option is the option used by. So the first option. The second option, sorry, was used by the Indian example. Sorry. The third example was used by Italian bank, right? So estimated emission basing on the economic data. So you provide finance in a currency, in euro, for example. Of course, it might be loan, it would be equity and so on. And then you kind of use sector-specific average factors, basically. This is how it's called in PCAF. Yes?
Yes, just wanted to jump
Time
in.
up.
We have actually one question online.
Oh.
And again, as yesterday, it's Heyman Butu, very active. Thank you so much also for joining us. There's two comments, or two questions actually. The first one, if you have less than 5 years data, how can you set a baseline year? Is it advisable to wait until you obtain 5 years of data, or recalculate the baseline year? This is the first question. And the second, can you set different targets for different scopes? For example, a different target for scope 1 and 2, while setting a different target for scope 3, for example.
Okay. Second question. Yes, you actually have to do that. I mean, these are different emissions, right? So, of course, we can say we want to cut 20% across all the scopes, right? But it's easier to change a light bulb in your building than forcing your client, which is scope 3, actually to change the light bulb in their building, right? So you need to weigh the ambitions toward emission reductions under scope 3 as a financial institution, because you will have to actually request it from your clients, and you have to most likely support them in that by providing not only financing, but most likely also a little bit of guidance. Yeah. But because then they will say, okay, but what can I do? And then you have to have a clear idea. So one of the ideas is the list that is being used by the Indian bank. Yeah. Okay, so the last 2 minutes, I saw the time is up, right?
There was the second part on the waiting with the 5 years.
No, you don't need to wait 5 years. I mean, you just look at the years and choose out of these few years the most significant one. I hope that's clear. Okay. Example, Santander Bank. These are print screens from their report. You can. You don't have to make a photo of this. You can Google Santander GHG report, and you will find the whole report there on their website. This is not something that is not available publicly. I just downloaded it lately. This is from Financial Report 2021-22, and because for 23 they did not submit yet, I guess. So you can see here that they are providing reporting on scope 1, so power generation within their institution, about energy, and this covers scope 1, 2, and 3. You can see there are some stars next to scope 3 because most likely they don't cover the whole portfolio, all clients, and so on. And then aviation. So this is the in general transport, steel, thermal coal information, and then also the use reporting to talk about the green finance they were providing. They talk about how much water they saved, how much, what's the second one? How much energy they save thanks to the finance they provided, how much resources in tons they reduced, how much heat energy they reduced thanks to their finance. And so in general, although of course reporting of scope 1 and 2 by financial institutions is important so that you understand your situation. Reporting on scope 3 actually is a very good occasion to do promotion, yeah? To build your brand value, to say we are green, we are promoting green projects amongst our clients, we are supporting them in different ways, and these are the results of our green facilities, right? We'll be looking at other examples during other sessions. And in the meantime, we move to the, we move to the group work. No? To the game, okay. Okay, we will have a game that will cover this aspect. So let's move to the next session.
Break.
Oh, break. Sorry. Thanks.
Yeah.
I need someone to.
Yeah, thanks very
we have
much for this presentation
break.
and also the patience to respond to all the questions. We will have a coffee break until 10 o'clock, and we can also discuss your last idea for the group work over a coffee, or also during the day, during lunch. So just to keep in mind, 10 minutes break, again outside, and then we continue with carbon accounting.
Oh.